name is Don Kaufman, and you are watching a TheoTrade presentation. There's a risk disclosure. So we're not financial advisors nor broker dealer. Um, some of you may or may not know this. I spent about 15 years in the brokerage world, which I'll discuss here momentarily. The other aspect, I think it's fair to say on this risk disclosure, I'm going to fire off some trades throughout the course of today's session. Listen, it's a live market. The marketplace is moving, and I am very, very likely to fire some trades. Do these trades at your own risk, of course. The next thing, this is a copyright disclaimer. It's ours. It's not yours. Anyway, if you ever need to get a hold of us after today, one of the reasons I always throw this in here, and I always mention this, like I don't want you to think that this is, the only time we can ever talk. Listen, if you ever need to get a hold of me, we use a common inbox, support@theotrade.com. Just put Don in the heading there, right? So put Don in the heading, and I'll make this even easier to see just to make sure everybody sees that right there. Again, put Don in the heading, and you'll get that right directly to me. The other aspect is we are based, TheoTrade is currently based, office in Scottsdale, Arizona. I am no longer residing in Scottsdale, Arizona, though we have an office there. I'm currently residing in the US Virgin Islands, St. Croix to be more specific. There's a kind of a community of traders down here. I have now lived here since early October, and got to tell you, I'm not leaving. It's not half bad. Anyway, it's a little background on me to begin with. This is why you're here today. So we're going to give you a huge amount of knowledge to be able to walk away with today. And again, when I talk about being able to walk away with knowledge, and by the way, yeah, in the background, you heard some trades executing here. I'm firing off a few positions here and there. So a few things right off the bat. I want you, again, I want you to be able to have knowledge that you can use today, tomorrow, right? And here's a few of the major points that we're going to be covering specifically today. How you can build a trade that's successful over multiple occurrences, many occurrences. We're not going to be a one-hit wonder and develop bad trading habits today, right? Number two, how you can take very minimal risk. In fact, I'm going to execute a bunch of live trades and produce very consistent 55% plus returns with very high probability movements in any stock. We'll look a little bit ETFs or index products. Number three, how you can take high probability directional positions. Okay, this doesn't matter whether you're a long-term investor, a swing trader, intraday trader. We're actually going to look again at very high probability directionally biased positions. How you can actually set up proper risk reward to learn how to grow a small account. By the way, the trade that I'm going to show you today, there's a few different trades, but one of them predominantly, yes, I talk about small account, but you're going to see in my own account, you can have, whether you have a few $1,000s in your account or a few $1 million in account, this is a great way to either grow an account or it's a great way to reduce risk of an existing account. And number five, how you can trade without having to continually monitor your positions. So I will actually put on a few trades and then use good till canceled orders to execute out of those particular positions, and that's important. One other aspect for those of you, of course, that are tuned in today, stay with me right until the end of the webcast, and I'll reiterate this time and again. We use an indicator here at TheoTrade, and the indicator is called the auto expected move. I use the indicator kind of incessantly, not just today's webinar, but I use it, for instance, on some of the weekend updates. Many of you have probably seen this on some of the weekend updates. This particular indicator, it's literally changed the way that we view the markets. We will provide this to you right at the end of the webcast. It's $497 value. People always ask, well, why do you do that? Number one, obviously, to keep you guys tuned in to the entire webcast. But number two, it's because I reference it incessantly. I use it constantly. I know that there's firms that charge, hundreds and hundreds of dollars for indicators. We don't do that. I mean, we want people looking at our indicators, trading off of our indicators. Okay, this is a very quantitative tool. Again, a very, very quantitative tool. I apologize. I'm filling orders in the background. I'm sure that my audio is actually coming through to a degree. So we executing some trades here, people. Anyway, the auto expected move. This is derived from an options chain, and I will explain it in a bit more extent later in today's webcast here. But what you're actually looking at, and in this particular case, this is actually a great example here. This is auto expected move as it applies to Tesla. What these three lines represent, what it's kind of saying is this is what Tesla was supposed to move on a week. Like this, it's this week. It's a forward looking indicator. And you're like, well, what's it based on? It's based on the options market. It says the options market says we're supposed to move up here or down here. Is it right? And everybody, oh, is it right? Look at this. Came right to the edge of the expected move, came right to the edge of the expected move. This one came right to the edge of the expected move, edge of the expected move. It's like week in and week out. It's one of the most, okay, I think resourceful quantitative indicators that you're ever going to find in this business. And again, I trade off of it constantly. When I say constantly, again, you're going to even see setups today. And again, we will absolutely provide you a link to this exact indicator. This is kind of no holds barred. Hope you guys understand that. Also, a few housekeeping items. Listen, today, this is a skill set. You're going to have to kind of tune in a little bit. I know that the market is open right now. Okay. I'm literally trading and I'm not trying to distract you in doing so. I have a few positions that I need to execute. I strongly urge you shut the door, maybe turn off Skype chat. Okay. Put your phone on silent mode, kick out some kids, the grandkids. Listen, we're going to go through some pretty in-depth material starting right now. This stuff's important, okay? For those of you, you're in this business right now, this can really change the way that you view markets, but more appropriately, it can reduce a huge amount of risk that clearly we all see in this marketplace. So it's a little background on me, and again, a few housekeeping items. Let's get into it. So this is a little bit about me. So I watched order flow for 15 years. I'll give you guys the 30-second synopsis. I grew up around traders. I had an uncle that was a market maker. He was a market maker in the early 70s. In 1976, though, he started a trading firm. He built the firm to over 500 seats on exchanges worldwide. He sold the firm in the early 90s. He actually sold the firm to the Swiss bank. It was a multi-billion-dollar deal. At that point, it was one of the largest financial transactions in the industry up until the point of 1992. Anyway, so I kind of grew up around trading and I got involved in it. And in the late 90s, I went to Chicago, started trading. I met a couple of traders in Chicago and they invited me to what became a startup brokerage firm. And that startup brokerage firm is called Thinkorswim. So I was lucky number 13 at Thinkorswim, employee number 13 at Thinkorswim. And my position at Thinkorswim is I built the education division of Thinkorswim. I worked extensively on building the Thinkorswim trading application. So there's questions about it. Of course, I'm probably still very well suited because I built a lot of the tools on there. I was there when our executive team took Thinkorswim public in 2007. I was there when TD Ameritrade came in and acquired us in 2009. And then I went on to actually run the education division of TD Ameritrade. And at the time, we had about 7 million clients. One of the most resourceful aspects of that particular position, and really one of the things that, if there's a claim to fame, I got to see what everybody else was doing. And it's just something that, people talk about, oh man, that was awesome. You were at Thinkorswim in the early days. Yeah, whatever. Don't care. It's all about watching order flow. Okay. You want to learn in this business? Watching the order flow for 15 years was incredible. And what that basically means, we got to study everybody's trades. So imagine there are 7 million clients. At the time I was there, there's 7 million clients and about 1.4 million of them traded options. And we got to see everything they did. So people had asked, questions like, well, if I sold a covered call, does it make money? We had the answer to that. So we actually took a lot of that knowledge to build the education here at TheoTrade. And because we just simply couldn't do it at the brokerage house, because the brokerage house, you're regulated. So we took a lot of the data, A lot of that, mass data of, again, 7 million clients. And what you're going to learn here specifically today literally comes from watching billions and others' mistakes, and more appropriately, the knowledge of what really works best for retail traders. So that's, I guess, a little background on myself. But um, yeah, it's again, it's been an interesting ride, and now we've been here at TheoTrade. TheoTrade has was officially formed in late 2015. Here we are in 2021, and a lot of our crew here at TheoTrade comes from TD Ameritrade, from Thinkorswim days. So it's a little background on us. I still do a lot of media appearances. This is the last time I was in Chicago, which is crazy. Um, this is TD Ameritrade TV. We'll do a couple of CNBC hits every now and again. Obviously, the most memorable, just simply because it's me versus the shark. With that, let's get down to business. Risk. Listen, your money's on the line, and that's one of the first things that I really wanted to cover in today's session. So the market right now is, well, ripping back to the upside. And I say ripping back to the upside. In fact, the market. Let's look at the market briefly. Okay, the S&Ps are up big time. I mean, they're up 55 points, about 1.5%. The Nasdaq's relatively flat. The Russell's almost up 5% on the day. Dogs and cats living together. This is a wild move today to the upside. There's no question about it. And all of this is for nothing if we don't understand this very simple idea. Okay, listen, late last night, the marketplace was tanking. And you're going to find out real quick that how you handle your risk in this business is directly correlated to your success in the markets. Too much risk. If you have too much risk on, you're going to panic. You're going to close positions continuously at the worst possible time. People, though, at least you're consistent with your panic. People panic at the same time. One of the things I want to drive home to you is, first of all, the strategy that we're going to be deploying today, the strategy I'm going to take you through, is to not only mitigate risk, but it's to give you high probability, okay, of success. So understand this comes from the fact that I've looked at hundreds of thousands of accounts. Okay, I've just seen what works and what doesn't, and a lot of what we're going to discuss, actually, a lot of this is built off of what doesn't work because it gets repeated over and over again. So we're going to point out a couple of flaws in your trading also as we kind of cruise through this. Listen, here's what works. You got to follow a system that has been sourced from hundreds of thousands of people like you. And that's really what we learned, okay, in the brokerage side of the business. It's not what works for market makers. Listen, I made markets, yada, yada, yada. None of that matters anymore. I'm serious about that too. People go, you're a market maker? You must know something. Okay, yeah, market makers know absolutely nothing. They don't know anything. They just stand down on a trading floor, at least back in the late 90s, you stand on a trading floor and, you just yell and scream and throw your hands up in the air a little bit. You're buying with one hand, selling with the other hand, flipping your tie back and forth to get people's attention. I mean, that ain't, what the marketplace is today. Listen, you got to follow a system that, again, it's got to be sourced from people like you, from retail traders. All right, you got to cut losses, and you got to use a repeatable strategy to obtain incremental returns. Again, successful trading strategies, they're going to exemplify the following principles of building a trade. When I talk about this, okay, we're going to look at principles of building a trade. So what this slide really is and what this amounts to, okay, this has got to be your approach to the marketplace. So, and I want people to literally to stop for a second, okay? Focus! I want you to stop for a second. I want to focus on this slide, okay? When I say this is how you approach the market, what does that really mean to you? And again, I really do want you to get a little bit introspective, all right? Trade logic, capital allocation, directional bias, okay? Some of you are not even really sure necessarily, like, what does that even mean? Okay, capital allocation is pretty easy, right? Like, how much money am I going to put in this thing? Directional bias, that's pretty easy too. You're bullish, you're bearish, right? Okay, this is always how we are going to approach the markets, right? See, everything that you're bombarded with in this business focuses here. What do you think the stock is going to do? I don't know. What do you think the stock's going to do? No, what are the stocks going to do? What's the market going to do? Listen, if you haven't recognized even in the last 24 hours, nobody knows what this thing is going to do. And that's okay. Like, you have to come to the conclusion, like, I'm trading blind. Listen, It's okay. But you have to follow these principles, not just to survive in this business, okay, but to have any degree of consistency. Look, trade logic. Place strategy and trade logic first. Listen, the vast majority of people involved in the markets, as I said a moment ago, they're infatuated with direction. Everything that you do, I got a MACD, I got a Fibonacci, I got my Bollinger Band, right? Don't take away my Bollinger Band. I'm not trying to take it away. All I'm saying though is you still have to have the right strategy. You got to have that coupled with some degree of entry and exit criteria, because what you're going to find out in this business, it ain't about being right. Okay. It is not about being right and picking direction. And again, do you think that a trading firm is out there? And I really mean this. Do you think trading firms are out there? Big trading firms. You think they sit around like a table and they go, huh? John, where do you think Microsoft's going? Huh? Come on, throw a couple billion in Microsoft. That guy over there, he's looking at a MACD, thinks it's going up. I mean, it's insane to think that. They have a definitive logic, okay, mathematical reasoning, okay, to put on a particular position. Does that make sense to everybody? Again, these are not rhetorical questions. I like to make sure that everybody's okay, that understands what I'm talking about, right? And it's important that you guys get this. Like trade logic is critical. And I'm going to show you some trade logic today. Yes, no, maybe. Okay. Oh, it's a quiet group. So again, they're not rhetorical questions. You're supposed to come in here. There's an entire Q&A section, and I like it. I like it when people actually hop in here and actually ask questions and so forth, respond possibly. All right. So that's a little bit about trade logic. The next thing, capital allocation. Okay. How and where you allocate capital should strongly be considered as a viable portion of your trading methodology. What does that mean? Listen, capital allocation in most cases, and this is a very controversial statement, but I'll prove it to you. Watch. Capital allocation takes precedence over being right in the markets. Like, what does that mean? It means how much capital you allocate is actually more important than you being right or wrong. Anybody know why? Does anybody know why? How can that possibly be? How many people here have ever put on a position? Think about this for a second. You put on a position is going horrifically against you. You literally get stopped out, and it feels like pretty much the second you got stopped out, the market turned and started ripping the exact opposite way. Okay. Anybody ever had this happen to him before? Anybody had that happen to him before? Where the marketplace literally, turned and burned. Okay. What was going on at that point? I mean, why'd you have the stop order there? You're like, probably because I didn't want to lose more money. Right. And I get it. I mean, that's why the stop order's in there. So allocation is effectively one of the most critical aspects of this. And last but definitely not least, directional bias. And it's like the dog hearing a new noise, right? Listen, I'm not anti-charts. I just recognize where you think a stock might go doesn't always mean the markets are going to agree with your sentiments. Listen, being right directionally cannot define us as investors or traders, for you might not be right often enough. And just always keep that in mind. Listen, you got to have this duration over direction. That's kind of our war cry here. And when I say it's our war cry, duration over direction. And what it means, okay, is you need to be capable of sustaining positions, sustaining trades long enough to be profitable, right? Think about that for a second. And again, sustaining positions can really define your overall success or failure in the markets. And that's where they're not good. And you're going to see duration over direction today. And I also threw this in here because it's kind of fun, but yeah, you want to be right or you want to be happy. So I guess my wife frequently reminds me of the famous phrase, do you want to be right or you want to be happy? That logic tends to work, beautifully in trade. It's not about being right to be able to make money. And I'm actually going to show you specifically that. All right. Experience and watching order flow for decades has taught us invaluable lessons. And here again, I'm going to proposition you with this question. All right. Have you ever stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter? Okay. Now somebody was already saying, do you use stop losses? All right, I'm going to actually show you an example here in just a moment with stop losses. I'm going to kind of get deep into the heart of some of the flaws of trading. So again, most people here have been stopped out and bailed out of a position only to see, you're like, wow, I got out at the worst possible price at the worst possible time. Congratulations, right? So to avoid that, we're going to introduce you to a real world strategy that you can start using immediately. And it is extraordinarily risk averse. But before I get into that, before I dig deep into a brand new strategy, okay, I don't want to blaze new ground until we understand a little bit about risk versus reward. And I'm going to kind of debunk a big myth in this business. And it's actually one of the first examples that was ever taught to me. So when we first learned about markets, okay, when we first learn about markets, we learn about trading. We're often exposed to the ideas of risk versus reward, like risk one to be able to make two. And it's a common strategic entrance to the marketplace. But have you ever looked at this in terms of probability? Okay. How many people can actually say, like, I've looked at risk one to make two, and I've looked at it in terms of probability? Very few people understand that everything that you do in this business, okay, and I really mean this, like everything you are ever going to do in this business, trading, investing, it's all based, okay? It is all based on probability. So the first thing I'm going to take you into, risk one to be able to make two, risk one to make two. Most of you guys are familiar with that. Here, let's show you a little bit of an example. So the first example, and over the years, I've actually been using the same example probably for close to 15 to 20 years, because again, it was one of the very first things that was taught to me. So we're going to go out there and we're going to trade a stock, and the stock is going to be trading right at 41 bucks. And we're going to set, okay, stop. And we're going to set the stop right smack at 40. Okay. And then we're going to have this target up here. And we're going to put that at 43. Does that look reasonable to everybody? By the way, I'm just trying to make it really, really round numbers. Like what? Look, when you're wrong on here, you can lose $1. When you're right, you can make 2. Does that make sense to everybody? Okay. Because again, this is setting a stop order, and you're out there, you're risking 1 to be able to make what? 2. And it's just a very prototypical risk 1 to be able to make 2 setup. Yes, we okay? Just making sure that everybody's good on the same page. All right. So if we understand that very simple concept, ready to move on. Let's actually apply probabilities to trading. So I'm going to set the exact same thing up again. You have this stock, and by the way, I actually call every stock stock, and stock is trading basically at 41. And again, that target is up here at 43, and the stop is down here at 40. So I want you to think about this, and I want you to think about it from a purely, and with all due respect, because I know people are like, what about MACDs? What about Fibonacci's? Right? I want you to think about this from a purely mathematical perspective, okay? What is more likely? What's more likely in this setup, okay? Moving down $1 or moving up 2, okay? What is this stock, whatever stock it is? And I'm telling you, it doesn't matter, because if you're in this business long enough, you're going to trade today, you're going to trade tomorrow, you're going to trade a month from now, you're going to trade 6 years from now, whatever, okay? I've been trading since 1998. So this is crazy enough. It's my 23rd year of trading, and that was outside the fact that I even grew up around traders, but I'm in my mid 40s and trading. This is the same example that again is taught time and again, but from a mathematical point of view. And again, what is more likely to happen here? And then people go, well, but what kind of technical setup did you have? I'm telling you right now, if you trade enough, it ain't going to make a difference. Okay. Listen, in a normal volatility fluctuation, you know what volatility fluctuation? We go up, we go down. Guess what? there's a much higher probability of moving down $1 before going up 2. Much higher probability. How come nobody ever points that out when they go, you should go out and you should risk 1 to be able to make 2? Like what? Well, okay, I get it. But the probability of going down $1 versus up 2, it's extraordinarily high, which means your stop order has a much higher probability of hitting. Does that make sense to everybody? I know I've asked that question a lot, but it's pretty quiet. And either I'm shooting too high over people's heads, or we're just, not really necessarily getting it. And it's important that you get this because listen, what you're going to learn is options or probabilities. Listen, I'm not here to stuff options down your throat. I'm really not. Some of you guys trade options, some of you don't. But I'm going to implore you, if you do not trade options, fine, but you have to look at them. You must look at them. Maybe you never looked at an option or ever traded an options market, but are you aware that options are based on probabilities? And options can actually help us in determining the viability and practicality of any given trading strategy. Okay, how? Well, let us look at what the probabilities are in the aforementioned risk 1 to be able to make 2, risk 1 to make 2, risk 1 to make 2, right? So before you freak out, I'm going to show you the next screen. The next screen, okay, this gets a little bit crazy in a hurry, so forget it. Let's just bring it up. Probabilities exposed. So what I'm showing you here, this is a screenshot taken today. I say I like live examples, but this is an example that I initially want to put you on a screenshot just to make it easier, right? Like, so it's static, so you're not distracted by everything. Listen, this is right here is the energy sector. If you're not familiar with it, it's called the XLE. It's the energy sector ETF, and it was trading at 41. And what I wanted to show you is with this thing trading at 41, okay, the example that I gave you a moment ago was real. When I said you have the stock trading at 41, right? So the stock is trading, stock is at 41. And then you have this target price up here at what? At 43. And then you set a stop at what? $40. Would you think that was fictitious? It's not fictitious. It's right here. It's right in front of you. And we have a tool that we use, and it's called probability of touching. Now, probability of touching, okay? It's on every major trading application. E-Trade has it. Tastyworks has it. Thinkorswim has it. Okay, pretty much every major trading application has what they term probability of touching. And what probability of touching means, it's the probability anytime in this case, we'll make it 9 days. I just define 9 days, okay, which is a little bit esoteric, but in the next 9 days, what's the probability of touching 40? Which means if you touch 40, you get what? Stopped out, 70%. What's the probability of hitting your target of 43? About 47%. Really? Because that's not good. You're basically getting into this position, not knowing, you have about a 70% chance of getting stopped out. Sign me up for that trade. Think about this, okay? Why would anybody go out and risk 1 to be able to make 2? Because what is it, right? I'm not saying it's a horrific trade. Like if you did this, a couple of 100 times, right? But what's going to happen to you is this. You're going to go out and you're going to risk 1 to be able to make 2, risk 1 to be able to make 2. But the problem with it is you're going to keep getting, right, stopped out, and you're going to get frustrated, and you're going to end up out of this business. That's what happens to people. They get stopped out, and then the market turns around. They get stopped out because it's normal fluctuation. Listen, risk versus reward revealed. The aforementioned XLE example, the probability of hitting the stop was 70%. The probability of hitting your target price was 47%. The risk 1 to make 2 scenario is a low probability disaster. It'll bleed you very, very slowly in your account, okay? Again, everybody all right with this? And people always ask, well, would that be true in my stock? I don't know, what stock? You name a stock, I'll look at it. Right? You name a stock. And we can look at this all day long because again, the example that I gave you isn't an example at all. It's real. This is the XLE, right? This is the XLE, and I open up the 9 day. And I come in here and I go, hey, let's switch this delta over to what's called probability of touching. Look, there's the probability of touching. Now the markets are moving around a little bit over here, but I mean, there it is. There's the probability of touching. Okay. So, oh, somebody said Apple. Oh, I've never heard of Apple before. Apple's the same thing. It doesn't, by the way, it really doesn't matter what stock you want to look at. Like, so if Apple's at 29 bucks and you go, let's say, what's the chance of it getting down to 127? It's about 76%, right? Versus what's the chance? So this, in this case, I'll risk 2 to be able to make 4, right? So what's the chance of getting all the way up to 133? It's like, oh, 58%. Like that's brutal, man. It's brutal when you start really breaking down some of the probabilities here. You know, what's the chance of getting here to 128? Like 86%. And I want to be honest here. Like, how many people are really using this tool? Like, how many people explore your strategies, okay, using things like probability of touching? Because I'm going to tell you right now, most people have never even heard of it. Okay. And this is something that, I mean, we built this on the Thinkorswim trading application. No joke, that's been in there since 2006. I know, I helped put it in there. Like this is, you know, and this calculation, it's been around. That calculation for probability of touching has actually been around since the late 1970s. And how many retail traders use it? Like none. Okay. Again, how many people actually use this? All right. It's good. It's good. Anyway, let us continue onward and upward from here. Now, we wanted to go through and debunk a little bit about risk reward, because what I want to bring you to, and what's actually most appropriate, and the reason we're here, is to position your portfolio with the right trade logic. One of the things I try to instill into traders, okay? And again, when I say traders, investors, and please don't get me wrong over here. What I'm talking about today doesn't necessarily mean that you have to be like this hyper crazed active trader. And I want to reiterate that again. What I'm saying today, okay, in no way, shape, or form implies that you need to be a hyperactive crazed trader. Some of the strategy that I'm exploring today, yes, you can be extraordinarily active with this, but one of the things that I also want to make very apparent, you may have, okay, a large portfolio and you'd be like, you know what, I realize I have a lot of risk right now, and maybe I could use this strategy to reduce some of my risk. And I want you guys to recognize that, because this marketplace, how do you describe today's marketplace? How do you describe the last few days between, you know, Monday, Tuesday, and Wednesday isn't even over? Okay. We have gone into the stratosphere of schizophrenia and back again with this marketplace. There's no other way to, you know, I've been doing this for, again, a long time. And these are the kind of moves, people, that you better, you know, you better watch out, because this is like, you know, it's dark out and there's footsteps coming up behind you and you're not exactly sure if that's going to be a monster or not. That's the kind of marketplace that we're in right now. And that's not good. It's just, it's not good. So with this, okay, we're going to position your portfolio with the right logic. So let's get down and dirty. How do you position yourself most effectively without exposing yourself to drastic risks and or low probability? So we need a trading strategy that overcomes a high probability of being stopped out. I'm going to tell you right now, okay? I do not use stop orders in this strategy. I never will use a stop order. There is not going to be a stop order. There's no need for it. So you always want to be able to overcome using a stop order, because if you're using a stop order, like I don't want to rip people apart. I really don't, okay? But if you're using a stop, first stop, it's a 4-letter word. No, but stop orders, it's an extraordinarily rudimentary tool. It's an entry-level tool for risk mitigation. And, you know, I know people come from all walks of life and they listen to other people about trading. I'm going to tell you something, and you believe it or not, okay, after 15 years in the brokerage world, okay, I spent about 2.5 years managing a very large portfolio prior to actually going into the brokerage world. I have never met, okay, a professional trader that uses stops other than intraday. There are some people that uses intraday stops, but I've never actually met professional traders that use stops. I've never met a market maker that use stops ever. Okay, and I want you to understand that, because it's important to me, and I don't want to upset anybody by that, but nobody uses that in the professional side of the business. It's taboo. In fact, you guys look back, if you Google like New York Stock Exchange stop orders, New York Stock Exchange outlawed stop orders years ago. Think about that. One of the most prolific exchanges in the business bans the use of stop orders. You should actually think about that. Your brokerage firm doesn't tell you that stuff, right? They'll still let you use a stop order, but the New York Stock Exchange doesn't even accept them. Think about that. Again, overcomes a high probability to be stopped out, defines your risk. You got to define risk, provides a high probability of success. You want something, okay, they can just do it again, do it again. It's about number of occurrences, limits capital exposure. Capital exposure and defining your risk, they're kind of joined at the hip, but they do mean different things, as you'll see. And you're never going to need to buy or sell the stock. You're not going to have to buy or sell the stock out there. It's all, okay, all critical aspects of this. Listen, enter the in-out spreads. In-out spreads, okay, they are designed to limit exposure and maximize potential with a minimal movement in the underlying. In-out spreads are absolutely options trades. I said the O word, okay? Some people are, pretty adamant that I just don't know if I want to learn, okay? I'm telling you right now, please take the time to learn. Take the time to learn. If there's one thing that I learned over 15 years of working in the brokerage world, okay, and listen, I don't have an axe to grind to tell people to trade options. You know what? I've actually traded more futures contracts today than I've traded options. I've actually traded a ton of stock today. I have, okay? But options, especially for retail clients, it's the way to mitigate risk. Don't fear options. Options and spreads are going to allow us to limit our risks without the use of stop orders. And that's a kind of the cool thing. Like people don't have that respect for options because they just don't understand that these options are going to allow you to basically trade very freely, to define your risk, to be comfortable, but yet providing you considerable upside potential. So I'm going to explain a little bit about what the spread breaks down to. So for those of you that are brand new, okay, if you're brand new, okay, and by the way, I love a question that just came in. Somebody said, talk about how you manage your emotion. Okay, there is none. There is none in here. And I'm actually going to show you that right now. How do I manage emotions in here? It's funny you actually say that because people always say that about me. They're like, I can't tell, Don, if you're up or down $20,000, $30,000 today. Okay, if you can tell if I'm making or losing money on a given day, something's probably wrong with my risk management. So I'm actually going to talk you through a little bit about in-out spreads, and I think you guys are really going to appreciate this one. And I'm going to give you a very generic example to begin with, and then we're actually going to work into a couple of live trades. We'll execute a few trades today too, if that's okay with everybody. So here's a stock. Let's just make it a stock, and it's a stock, and that stock is trading where you guys want it to be trading at. Right at, let's make it $100, okay? Just make it a very generic example. So that's a stock and the stock's trading at $100. Do I own the stock? Nope. Do I want to own the stock? Nope. Do I have to own the stock? Nope. What am I going to trade? Options, okay? In this case, I'm initially going to go out, okay? And I'm going to buy, and I'm going to buy a 99 call. Okay, I'm going to buy a 99 call. Now, for those of you that have absolutely unequivocally no options experience, okay, just hang with me. Grab the big chunks of concept, right? Just big concepts, a little bit of theory in here, you'd be fine. So a 99 call, let's say the 99 call is trading for $3. So out here, again, I'm going to buy, and it's going to be a 99 call, and that thing is going to be trading for $3. And that's a minus because I have to pay. Okay. Now, this entire trade, let's say, is good for a period of 1 month. Okay. Just put that up there. It's good for a month. Options, they're time sensitive. This one's going to be good for a month. So stop. If we buy a 99 call, okay, what does the 99 call give me the right to do? If I buy a 99 call, it gives me the right to buy the stock at 99. Okay. Do I want to buy the stock? No, but I have the right to buy the stock at 99. What did I pay for that right? $3. What does that $3 give me? It gives me time to be right, time to be wrong, time to laugh, time to cry. But it gives me what? 1 month of time. And if you buy the 99 call, where do you want the stock to go? You want it to go up. You want that stock to go to 110 because you have the right to buy the stock at 99. Everybody else in the world then would have to pay 110. What is a 99 call worth minimum with the stock trading at 110? Well, if you have the right to buy the stock at 99, could you buy the stock at 99? Yes. You could buy the stock at 99, deliver it to somebody at 110. What would you make? $11. You'd make $11 minus the $3 you initially paid. Okay. But that's what a 99 call gives you the right to do. Now, because you have the right to buy the stock at 99, do you have to buy the stock at 99? No. Are you obligated in any way, shape, or form? No. Then why did I buy it? Because I was just trying to make money off the option. Period. Okay. That's what a 99 call does. We okay so far? Huh? Anybody? You have the right to buy the stock at 99. Everybody else out there has to do what? Pay whatever the stock is trading at. Now, I'm not just going to buy a 99 call. What's wrong with the 99 call? Why not just buy the 99 call? I'll tell you what's wrong. If the stock stays flat at 100, you're going to lose money. If the stock stays flat at 100, you're going to lose money. How are you going to lose money? Well, if the stock stays flat at 100, your 99 call, what's it going to be worth? Oh, you could buy the stock at 99, sell the stock at 100. You can only make $1. Your $3 is not going to be worth $1. What happens if the stock sells off? If the stock sells off, your 99 call could be worthless. Big pile of junk. Okay, your $3 is going to be worth nothing. Okay, so if the stock stays flat, you can lose money. If the stock goes down, you can lose money. I don't like that idea. So I am simultaneously going to sell, okay, a 101 call. I'm going to sell a 101 call. In this case, I'm actually going to collect $2. Let's put this down here. This is a sell, and it's a 101 call, and we're going to collect $2. So what am I into this thing for? $1. So stop right there, because a lot of people go, whoa, 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 whoa. Slow down there, cowboy. How did you sell a 101 call? I don't ever remember you owning a 101 call. I didn't own it. I sold myself into an obligation. That's what options are. Options are rights. This is a right. Options are obligations. This is an obligation. Buyers have rights. Sellers have obligations. In this case, I am what? I have the right to buy the stock at 99. And then if I sell the 101 call, someone else has the right to take stock from me at 101. Do I own stock? No. Well, what happens if we go up? Well, what's going to happen in here? Listen, you have the right to buy the stock at 99. Can you buy the stock at 99? Yes. And then you could give somebody that stock at what? At 101. So if the stock goes and soars all the way up here to 120, so if the stock goes to 120, somebody says, I want my stock at 101. You go, oh, but still my heart. You have the right to buy it at 99, give it to them at 101. What do you make? What's the most you can make? If you have a 99 call that you own and you've actually sold a 101 call, what's the most you can make? In a $2 wide spread. The most you can make in a $2 wide spread is what? You guys tell me, what's the most you can make in a $2 wide spread? You can only make $2. You can only make $2. The most you can possibly make in this spread is $2, of which you paid $1 up front for. So what are you doing in here? You're risking $1. Check this out. Risk $1 to what? To make $1. You're risking $1 to be able to make $1. Everybody goes, why would I ever want to do that? Why would I ever want to risk $1 to be able to make $1? How am I ever going to make money? Does anybody see how you can make money in this? Every time I go out and I trade, and I want to give you this example because this is the stuff, people, I'm telling you, that's pivotal. Every time I go out, I'm going to risk $1 to be able to make exactly $1. How can you make money in that scenario? Risk $1 to make $1, risk $1 to make $1, risk $1 to make $1. Get it through your head. Risk $1 to make $1. How can that be worthwhile? Anybody? Huh? Okay. Kind of curious on this one. Risk $1 to be able to make $1. How can you make money? Somebody says you have to be right more than 50% of the time. It's actually not true. It's not true. Okay. I'm going to tell you exactly how it's done. And we're actually going to go through this time and time again. You have a defined risk trade on. The marketplace is right here. Okay. In fact, I'm even going to change colors so you guys can see this. Here's where the marketplace is. The marketplace can absolutely sell off. Let's say you put this trade on and the marketplace sells off. Now the marketplace is all the way at 97. Are you done? Are you stopped out? No. Why? Because you only have $1 of risk. So you're never going to get stopped out, right? No, you just leave the trade on. You have a month to go. You know what? I could do this trade with 2 months. I could do this trade with 3 months. Okay. So the stock goes all the way down here to 97. You're panicking. You're like foaming at the mouth. I'm going to lose $1. I'm going to lose $1. And you know what? That happened in the first week. 2 weeks later, stock is all the way back up here. Let's call it at 105. What do? You get out profitably, collect $1. By putting on the right kind of trade with risk a buck to be able to make a buck, you've actually made yourself rather impervious to the dollar of risk. You have an incredibly high probability of making $1 before losing the full dollar. That's actually one of the main keys to the strategy. So in a risk one to make one setup, the way that you're actually profitable, it's not about being right or wrong. It's about the ability to sustain the position when you are wrong long enough to see the light of day. I don't care whether you do this bullish or bearish either, because that's the one thing that people get dead wrong. There is a higher probability of making $1 before losing $1. And that's one of the things that, again, we're going to stress time and time again. That's what the strategy is about. This is what trade logic amounts to. Does that make sense to everybody? Again, that's, I ask that question a lot, but it's important. Okay. It's really, really important. It's not about being right. It's about sustainability. It's about what's the war cry that we used earlier? What's the war cry we used? It's about duration over direction. Think about that. It's about duration over direction. Now, in-out spreads, energy sector example. So let's continue. Let's go back. We were talking about the energy sector, right? We were talking about the energy sector. I brought it up a little while ago. We were looking at Apple, but here was the energy sector. And the energy sector is moving around a little bit. But I'll tell you what, we're going to come back to this. We're going to come back to the energy sector example. And instead of trading the stock and using stop orders, I'm actually going to use a spread. I'm going to use an in-out spread. So I'm not going to buy the stock at 41. I'm actually going to use a spread trade to limit risks, provide a high probability without the use of stops. Okay, here we go. The XLE. And again, I'm just laying this out for you. Here's the XLE. It's trading right at 41. If you looked at it a moment ago, it's 41.22. Okay, I'm going to buy a 40 call and I'm going to sell a 42 call. Buy a 40 call, sell a 42 call. How much can you make? In a $2 wide spread, you can make as much as $2. So in this case, I'm buying the 40 call. It gives me the right to buy the stock at 40. I'm selling the 42 call. It gives somebody else the right to take stock from me at 42. Okay, I'm paying $2.70. Okay, I'm collecting what? $1.70. I can actually put this spread on for $1 debit. Stop right there for a second. Why does the trade have viability? Because here's where the stock currently is. How can I do this trade? I don't get it. I could do the trade for a month. I could do the trade for 2 months. I could do the trade for 3 months. You want to do the trade for 3 months? It's fine. Let me ask you something. People always assume that options cost more the more time you have. Is that true? Will it cost me more to do this trade further out in time? Is it going to cost me more to do the trade? If I did it for 3 months versus 1 month versus 2 months, is it really going to cost more to do a 3-month trade? Okay. Definitely setting you guys up. It's going to cost me about the same. It's going to cost me the same, okay? Because this is a structurally sound trade. It will absolutely, unequivocally not cost more. In fact, if you'd like to see that, you'd like to explore that, you can actually pop the platform up, right? And what you're going to see in this particular case is I can go a month out. I can go a month out and structure the trade. Now we are in a live market environment here. This trade will cost me $1. Okay, that is in 44 days from now. But I could open up the 72-day options and I could do the exact same trade in the 72-day options, and it will cost me about $1. I can go out 163 days. Ain't gonna make a difference because I'm one strike in the money, one strike out of the money. We know what we're doing. Okay. Now, that isn't the edge in the trade. You know what the edge in the trade is here? The edge in the trade is knowing that you're sustainably comfortable with $1 debit. How much can you lose? Scream it out. I can't lose more than $1. How much can you make? I can't make more than $1. The whole key is over here, duration over direction. We sell off big. I'm feeling the fear. And all of a sudden we rally. And what do? Okay. There's an incredibly high probability of making okay, money on here because you can sustain the position. You have $1 of risk. You don't need no stinking stop order. You know what the problem with the stop is? You know what the problem with the stop is? They work. That's the problem with the stop. You don't need a stop. You already have $1 debit. That is your stop. You go, I don't want to have that much risk. Then just do one contract. One contract, you would have $100 of risk in this particular position. Okay. You got to get this. You got to get this stuff down that you can be initially wrong and come out, okay, beautiful in the trade. And vice versa. You don't have to do this. I don't always have to be bullish. I could be bearish. Well, look at that. Listen, this is why you want to use in-out spreads. Overcomes a high probability being stopped out. You can't get stopped out. Defines your risk, limits capital exposure. You never need to buy or sell the stock. You realize how much risk is out there right now? And again, I'm not being facetious with that. Do you realize how much risk is out there right now? You have one bad day. Monday of this week probably scared you. Today you're like, I'm okay. It's gonna be okay. I'm okay. Okay. It's not okay. People have ridiculous risk on. Why? Right? And again, it provides a high probability of success. You can initially be wrong in terms of price movement, and you're still going to come out ahead. Like I said, you need this in your life. Let me show you the real example. Okay. Now, this is when I say it's a real example, this is a screenshot that I took earlier today. This is a screenshot that I took earlier in the day. And all I wanted to do was just lay out. Listen, I'm just buying the 40s, right? Selling the 42s. The whole thing is done for about a $1 debit. That is my maximum risk. Energy sector is at 41. What else do you need to know? Okay. Well, you need to know some very specific criteria. Should I do this for a month, for 2 months, for 3 months? How far out in time do you need to go? Can I do this in any product? Like, think about all the variables in here. Right? Anybody want to see here? Let's go back live. Let's go in here live, and let's just make, for argument's sake, this is the trade, okay, that I brought up a moment ago. This is the exact trade. And look, lo and behold, it's going for about $1 debit, and it's in the XLE. Let me see if I'm on the right account. There we go. Okay, it's in the XLE. Fire at will. All right. You're like, I'm working. I'm not feeling. You can cancel, replace the order. Let's not get crazy. But I bet you if I come to $1.01, it'll fill immediately. I don't even want to do that. Right? I'll just keep putting it in here at $1 and see if somebody else fills me. Okay. Work the orders. Work the orders diligently. I'll come in here and actually fill one. All right. So I filled one on the Phillips. Come back over here. I'll work it at $1. I'd be much more comfortable with this strategy at $1. Okay. And there it is. I filled it $1. All I'm doing right now is just executing this particular spread. Now, what do? I don't know. I could set a good till canceled order to get myself out. I literally can create the opposing order and say, I want to get out at X level. I mean, that's it. And then just switch this to good till canceled. It is that easy. Now, okay, with that is on a $41 stock. That's on a $41 stock. Okay. What else could I do it on? In-out spreads give you the power to trade massive stocks and index products, pennies at risk. You can have literally mere pennies at risk, right? Here are a few live trading examples. You guys tell me, what do you want to trade, right? What do you want to trade over here? Because this is your call. Point I want to make with this, I mean, how many people are losing their life savings in this underlying? Think about it. You have one bad day in Tesla, people are going to lose everything. One bad day in Tesla. Now, yes, Tesla, it ripped to the upside today. It's got earnings coming out. I don't want to deal with the earnings right now. I just want to come in here and I say, like, if I am bullish or if I'm bearish, what do you guys want to be? You want to be bullish? You want to be bearish? Do you want to trade Tesla? Or you want to trade something else? You tell me, okay? Make it something like viable, though. Make it something like worthwhile. What do you want to be? You tell me, bullish or bearish in the stock. It's fine. I won't be offended, okay? Oh, bullish on Microsoft, bullish on this, bullish on that, all right? Oh, Amazon. Oh, Amazon's big and scary. All right, let's actually make a quick point on Amazon. So Amazon also has earnings coming up on the 28th, so I'm going to actually trade it before that particular time frame. I don't really want to mess with earnings. Let's go to the next 16 days. I'm going to tell you right now, it's my money. My money says I want to be bearish. Okay, why? I don't like no stinking Amazon. So I'm going to come in here and I'm actually going to work this order right at 250. I don't know if I'm going to fill, but I'm going to work the order at 250 in here. Okay, and I'm trying to wrap around stock that's at 31 like 80. So that's an Amazon spread. That's it. Okay, I just did a quick one with 16 days left. What else could you do it in? All right. IWM. IWM is literally up $10 today. This is the Russell. I've got positions scattered all over the IWM. But at some point, you might say like, hey, you know what? Maybe this index product has gone too far, too fast. It's exploding to the upside. And you say, I want to be bullish, or I want to be bearish. You do it in here. Okay. I mean, you can go to pretty much any product that you want that's liquid, and you can fire off positions. And this is, again, people are so worried about, and it's interesting to see this. Oh, I like it. Somebody actually pulled up GLD. What do you want to be in GLD, bullish or bearish? Now that's kind of cool because GLD is an interesting, GLD is an interesting underlying right now. Wouldn't have expected it to have sold off today, right? Okay. You want to be bullish or bearish inside of GLD. You want to do it for a month, for 2 months. We're trading 179.35, maybe the 178, something like 180s. Ooh, look at that. Fire at will. Okay. Fire at will. That's it. Like, how fast can you actually fire these positions off? All right. It's not about speed. It's not about accuracy. It's about creating, okay, the right trade. By the way, this is, somebody just asked, is it paper trading? Yeah, that's not paper trading. Okay. So I just fired off a couple one lots here. Like, what's my risk in here? Like, do I care? I just put on a trade that has 96 cents of risk. I'm actually going to go back in here and fill this one at 95 cents. I like it. All right, I'm going to take a little bit of a bullish position, filled at 95 cents. Okay, I'm going to come back in here. I'm going to create a duplicate order. Now I'm going to come in here at 94 cents. All right. All I'm trying to teach you is good order routing at the same time as execution of these spreads. Okay, so I can do this in Amazon. Clearly, I can do it in Amazon. I can do it in Tesla. I can do it in gold. All right, I just traded one. You know what? I traded one the other day in EEM. I put on a bearish position inside of EEM the other day. Here it is. Okay, that's a position. I literally just put that on yesterday. So I've got a ton of these particular positions on. Make a couple bullish, a couple bearish. Understand, this is not about necessarily being right or wrong. All we ask is we need a little back and forth in the marketplace. If the marketplace goes straight up, better have some bullish positions on, but you only need like one down day. Again, it's not about your MACD, your Fibonacci, your Bollinger Band. It's not about the setup, but I will tell you what can help you a tremendous amount. Check this out. This is what we call, okay, auto expected moves. Look at the auto expected moves, because very often, if you're looking for support and resistance, these can be wonderful quantitative tools for support and resistance. Okay, wonderful quantitative tools. And this is something we actually talk, incessantly about, is using some of these tools, okay, to be able to create strategies like in-out spreads. Listen, here's a couple of my previous trades. So this is just a Twitter in-out spread. And I'll take you a little trip down memory lane. If you were looking right now at my screen, okay, these are trades that I've executed, and they're just stuff I've executed over the last couple of months. This is the exact day I got in, the day I got out. Okay, every $109 I invested, I got back 144. It's a 32% return. Okay, some of these happens to actually be this. In this case, this was an earnings-based trade. I wanted to reduce risk on earnings. Okay, so I came in and reduced my risk on earnings. Next trade. IWM. IWM, I entered this on October 6th, exited October 30th. Every $88 I invested, I got back 131. Now, one thing I want to kind of quantify for just a second. This trade does not have to be $88. You could have done 10 contracts and made it $880 to get back 1,310. It's still a 49% return, okay? Now, to kind of continue onward and upward over here, this is a NVIDIA spread, okay? NVIDIA, I had this trade on for the period of about a month, almost a month. Over $245 I invested, I got back 320. It's a 30% return. Okay. Here's another IWM spread. You'll notice, especially with me, okay, I'll trade the exact same products again and again and again and again. Okay. Again, and again. And you don't need, somebody said, like, how much capital do you need to do this? I'll tell you exactly how much capital you need in reserve. Here, if this spread is done for 90, it's 90. That's it. You need $90. Okay. Now, FINRA and the SEC says you have to have $2,000 minimum inside the account. That's in a margin account. If it's a cash account, you could have less than that, but technically you need over $2,000 in your account to be able to trade spreads. But this one will only tie up $90. Okay, so that's an in-out spread. Specifically, this one lasted a period of 3 weeks, 54% return. The next one, this is a Lulu in-out spread. I put this on September 23rd, closed it about a month later, which is what, October 22nd. Every $120 I invested, I got back 192. It's a 60% return. Okay, this is an eBay in-out spread done in October. Literally, this is an earnings trade. It's just a 2-day trade. Every $97 I invested, I got back 193. It's a 99% return. This is a Snapchat trade. Okay, again, I like to use the in-out spreads around earnings. In this case, every $91 I invested, I got back 198. It's 118% return. Okay, this is the financials. This is the XLF. This trade, it's kind of a cool trade. Brought this one in just to show you this. Again, here's a trade where it was on for basically less than 24 hours. Every $46 I invested, I got back 63. It's a 37% return, but it's a 37% return in less than a 24-hour period of time. You know, one of the key things, everybody looks at the return, okay? At $46 invested, or 460, depending upon how many contracts you wanted to do, or 4,600. You could have actually ended up into this. But the point being is, in a marketplace like we're in right here, right now, you think about risk, okay? And people think about it all wrong. They go, well, how much can I make? How much can I make? You know, you go out there and you take minimal risk to make these kind of returns, you understand that you're going to survive no matter what this marketplace throws at you. That's one of the critical things. Like, again, you want to be in this business and you want to succeed in the business and you want to, generate returns. You got to get through the learning curve. You got to understand that how much capital you have invested. Okay. Like, oh, I have a $2 million portfolio. Really? Because that $2 million portfolio could get literally cut by a third almost overnight. We saw that back in March. These strategies, who cares? You walk away from $46. There's an incredibly high probability, right, of making positive returns in these trades. That's what's critical about them. Here's actually a moo trade. Moo! All right, it's Micron. Every $96 I invested, I got back 238. This is 148% return. Okay, this, again, nothing too special about it. It's not even an earnings-based trade. This is just an underlying that absolutely exploded to the upside. Next one, FedEx. FedEx, okay, every $210 I invested, I got back 357. It's a 70% return. Listen, okay, I can go through trade after trade after trade after trade. And by the way, right now, I'm stacked with in-out spreads. I'll leave it there in like December because my December trades haven't come off. If you notice, most of the time horizons of these trades, I don't mind saying this, most of the time horizons, it's usually a 3 to 4 weeks. Okay, so right now I have a bunch of them right on coming off. Okay, I mean, we're getting ready to actually, this is the time. Like, this is, it's earnings season too, so you can play with these around earnings, and you want to get a feel, but you want to get a feel with very minimal amounts of capital at risk. Listen, what better time? Learn a skill set. It'll last you a lifetime. Okay, and I cannot stress that enough. And I'm getting filled in the background here again. When are you ever going to have time like this again too? I mean, a lot of people, if they're quarantined, I get it. Like, I really do get it. And people, I started off with this, and some people may have missed this. Okay, I'm not necessarily quarantined, but I realized that, what was going on in the world right now is not just going to go away overnight. So I picked up and I actually moved, not just myself. I have a wife and 3 kids. We moved the entire family to the U.S. Virgin Islands to kind of isolate ourselves. So can't say that I'm out quarantined. I don't really leave the house too much, but a tremendous amount of time. Listen, if you're still working, do this very, very part-time. Like, these spreads, in-out spreads, do not have to be all day, every day. They don't have to be sitting in front of the computer sweating it out. You could use these trades much more actively. But in today's session, I want to use them a little bit more hands off. Again, if you're quarantined, this is how you emerge stronger and in better financial shape. Okay. You don't know what is about to come. I mean, how many more things do you want thrown at you in a marketplace? I mean, the rest of this week, there's more catalysts than I can even name. I mean, literally, Fed minutes coming out right now. It just goes on and on and on and on. The employment situation's coming out on Friday. The jobless claims will be out on Thursday. Next week holds more. It's a political disaster out there. Listen, this is what you need to learn to reduce your risk. What our members are saying. Okay, this one actually, you know what? I'll start with the bottom. This one was today. It said, Ali, Don, help me pay for 1 year of TheoTrade subscription with the QQQ. It's a position I did in the QQQ. Reason I started with that is somebody actually asked a moment ago. They said, hey, can you do this in the QQQ? Yes, I can. Okay, it's good. Brent W, you won't find a more supportive and more profitable room anywhere in the retail business. And this is one a little older, but I kept it. But hi guys, new member here. Been lurking in chat for about a month. Was short the SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. And I take that stuff to heart. Listen, if you don't have a huge amount of time, okay, realize that each and every trade that I showed today, you know, I went through and I showed you like, when I say each of the trades, from the Snapchat trade to the Lululemon trade to the Micron trade, all of those were displayed live here at TheoTrade. The trade results were showing, okay, they're perfect for part-timers. The in-out spread is very, very hands-off, uses good till canceled, what we term set and forget order types. So even a fraction of your time is enough to see some results. Like I don't want you to think that you have to be glued to a screen, but at the same time, there's a little bit of learning in here. It's okay. Like here's some of the characteristics, right? Attributes of the high probability in-out spread are undeniable. Listen, you never have to buy or sell the stock. Defines your risk. Risk is limited to precisely your comfort level. No need to use a stop order. Okay, can vary time frames and not pay more. Showed you that in the XLE. Probability of profit is high. It's the perfect spread to reduce risk of a stock portfolio. It's also an excellent tool for those seeking returns to build a smaller account. You know, this this is what options is about. It's about risk reduction. Okay, but you do have to learn how to build the in-out spread, but do not for a second, just not for a second, don't let options intimidate you. The spread below is being done for a dollar debit. Now, spreads and options, they're analogous to like a massive power saw. Listen, if you want to be involved in finance, if you want to be involved in the markets, you know, options are going to be the quickest, the fastest, the safest, the easiest way to get where you do want to go in the markets, right? But if you don't know how to use options correctly, you're going to cut off a couple of fingers. And I always reiterate that you have to learn how to build these things properly to make them profitable, right? You can do in-out spreads. Maybe you know nothing about options, you know, limited options experience. Again, do not let the options portion of it intimidate you. You're going to need these strategies for the foreseeable future because volatility right now, it's all around us. And I'm not here to prophesize that we're going to have a huge sell off, a huge rally. Okay, that's not the point of today. The point of today is to recognize that we are at some wild levels in the marketplace. Okay, no matter what news breaks, good news, bad news, indifferent, we rally on it. Okay, you just love it until you don't. Listen, we can show you how and when to place these in-out spreads and take a couple of hours. And it does take a couple of hours because what we do here at TheoTrade, we create detailed recipes for every strategy, including in-out spreads. And that sounds just like it is. You know, you wouldn't bake a cake without a recipe, so why trade without one, right? Listen, when I talk about the strategy, I think a lot of people get like, all right, so I buy one strike in the money, one strike out of the money, but that isn't some of the details. That isn't some of the recipe, okay? Let me actually get a little more detailed into this. This is what you're going to need to know to successfully enter and more importantly, exit in-out spreads, okay? What underlyings, stocks or indices make the best in-out spread candidates? Think about this, right? By the way, yeah, you can actually do this on the S&P options and futures, okay? Absolutely. Oh, the win-loss ratio, I've got that too. I can go through all of I'm going to hit all these questions in here, okay? By the way, you don't ever have to worry about the short getting exercise because if it does, you make a full $2. Getting ahead of ourselves, but I love this. What underlying do you use for candidates? You know, should I use Amazon? Should I use Tesla? I'll tell you right now, Tesla's not going to work. It's actually why I didn't trade it, okay? Why? Because what volatility should I seek out? Too much volatility, you're dead. Too little volatility, it's not going to move enough. You have to have the right volatility. What options expiration do I select? Now, a moment ago, you saw me do about 44 days out, but then I priced the 72-day trade, and the 72-day trade priced the same as the 44-day trade. Maybe I could do the 16-day trade like I just did a moment ago. Like, oh, I don't know, which one should I do? Okay, look at all the expirations out there. Let me just show you something really kind of, this is breathtaking, right? This is the SPX. There are options for today, for Friday, for Monday. Okay, look how many expirations there are just 37 days from now. It's insane. Okay, look how many expirations there are. There's a lot of options on those options. You have to know exactly what options expiration to select. Okay, what should be the delta of the option that I buy? You have to get the delta spot on. Okay, then what options do I sell against my position? Okay, how do I build the trade? Like physically, how do I build the trade? People are like, I can figure that out. I can figure it out. Okay, do I need a large amount of capital in my account? Absolutely not. We've already talked about that. $2,000 in the account. I showed you a couple of trades. One of them I had $46 at risk. If you did one contract, it'd have been $46 at risk. What's the right amount of risk for you? Dependent upon your account size, dependent upon what some of the goals are, okay? In our course, in the criteria, we'll actually define this is how much risk you should probably be taking. Okay, what are the percentage returns supposed to be? Well, that determine. Okay, is it an earnings trade? Is it a non-earnings trade? Okay, percentage returns. Like when do I go out? Should I make 70%, 80%? Should I make 100%? Because if I wait too long, I might end up actually losing in the position. Right? Listen, let me show you what we do here at TheoTrade. TheoTrade creates recipes in trading. And what a recipe in trading is, well, trading is all about answering the what ifs. It means what might be a good stock or ETF candidate for an in-out spread. So we answer that, right? What's the correct options expiration cycle? How much capital do I commit? Okay, what strike price options do I buy and which ones do I sell and how many? And growing a small account, what should my allocation be? TheoTrade has the answers because we build recipes with definitive criteria. And this, again, this is what differentiates what we do here. I'm going to tell you right now, and I'm going to say this a couple times. You can go out right now, you can Google what an in-out spread is. You can Google, okay, what a vertical spread is in the marketplace. And you'll find 10,000 pages that'll talk about this is a spread, this is a spread. None of them are going to have a checklist. None of them are actually going to have definitive criteria that we have literally been working on our entire career. And I say we, TheoTrade's not a one-trick pony. We got Jeff Bierman, we've got Blake Young. Okay, I mean, listen, I could go with Corey Rosenblum, Tony Rago, Slim Miller, right? We have 8 full-time instructors. Jeff Bierman, by the way, is a professor of finance at Loyola. Okay, and DePaul kind of moonlights with us. It's critical, people, that you understand that this stuff is based, okay, on not even just my experience. This is the kind of stuff that we built off of knowing and having that knowledge of order flow for the better part of 15 years, right? That's where these criteria, these checklists are coming from. When I talk about a checklist, this is no different than a pilot getting into a cockpit. So the pilot gets into the cockpit, they don't just basically turn a key and hit the gas and take off, throttle up, we're ready to go, baby. They sit there for 10 to 15 minutes. They go through a checklist. And you're like, hey, come on, I'm late. I got to go to Vegas. Nobody's going anywhere right now, but that's a different story. The point that I am making with this, okay, I implore you to understand the criteria, to go through the checklist for each unique variable you're going to encounter. You literally go, step 1, what should the liquidity be? Step 2, what candidate? Step 3, what should be the volatility? Step 4, okay, what expiration cycle? Step 5, setting the options to buy. Step 6, knowing your allocation. Like we go through all of this. TheoTrade is the answer to your questions. We'll give you the right probability for the trade. How many option contracts? When do I close my in-out spread? What if we sell off big? What's the correct return for the strategy? What if we rally massively? Can I fix a losing trade? It's all about how, when, why, at what price. And I'm telling you right now, it's just the beginning of the variables that you're going to face while buying in-out spreads. I mean, literally, this is scraping the surface. Okay. As I said a moment ago, you can read what a spread is. You might even know how to build a spread. Okay. You can Google it. But you need TheoTrade's recipe for success. Okay. This is just my background. I have 20 plus years of trading experience. I had access to client order flow for 15 years. I was an executive at both Thinkorswim and TD Ameritrade. And it's, again, order flow is everything. That's where the criteria comes from. Literally viewed and studied millions of trading accounts, okay? Because I ran the education division of TD Ameritrade, right? And we had the largest option order flow in the entire industry. Listen, again, criteria is your recipe for success. The following strategy, which is the in-out spread, and its corresponding criteria requires the utmost attention to detail. We spent years, people, years fine-tuning this trade setup and criteria. And when you approach the section on criteria, you follow the steps to build a trade. We built a full-blown class on this. It's the guide to small account growth with in-out spreads. Okay. I am the trade instructor. It is a 4-hour course. It's available immediately. Okay, this particular course is something that we actually have pre-recorded. It is ready to go. It has 24/7 access. The class slide deck, we put it into a PDF file, and it includes all of the entry and exit criteria. It's the checklist. It's available right now, immediately for download. The course is archived, okay, as I was saying a moment ago, but it's also accessible, right, through our mobile applications. So here at TheoTrade, we've also built mobile applications for both iOS and Android. So people say, well, I can't sit in front of my computer for 4 hours. I get it. That's why we built it. Okay. It'll work on your tablets, whether it's an iPad, whether it's an Android, any of your tablets, it'll work on. You can actually download it and even view it offline with our mobile access. You can even come in here and watch the class, okay, at like 2 times the speed. I sound like a chipmunk. It's awesome. Okay. The class is $497. We have today a phenomenal offer for you. I'm telling you right now, stick with me for the next couple of moments. Okay, stick with me for the next couple of moments because it's not going to be $497. We have a phenomenal offer, and we have something with the offer today that I'm telling you right now we have never done before. Some people have actually tuned in and be like, oh yeah, I've heard about this class before. Okay, this class, okay, has now had over 13,000 individuals attend. Okay, the in-out spread course has now had over 13,000 individuals attend it. It is by far and away, okay, the most, I guess, critically acclaimed class that we have actually done here at TheoTrade. And I'm telling you why, okay, because the criteria is that strong. I mean, we put like bulletproof criteria in there. You're actually going to go through the steps, okay, to be able to build the trade. But more often, we actually fire trades out to you. And I'm just going to tell you right now, what we do here at TheoTrade is vastly different than any other education firm. And I want you guys to know that now. That's why I actually put this in here, okay? TheoTrade does not go out and ever sell one class. I know people have been through the gauntlet of stuff. They go out there and they pay $500 for a course, right? You go, $500 I paid for a course, and then they charge you for an indicator. Another $500, they charge you for an indicator. And then before you know it, you have to take another class. It's $500. Why you have to take that class? To learn how to use the indicator that goes with the initial class. And before you know it, you're into for $1,500. It's ridiculous, okay? I'm going to tell you right now, what we do here at TheoTrade, again, we differentiate from any other education firm in this business. Most of us come from the brokerage world, the professional trading world. Few of us have actually managed very large, sums of capital, right? We give you everything that you're going to need to invest, to trade, okay? And we give you support. One of the things we do, and I'm just going to tell you right now, okay? You can email us. Go through the course. You can email us. You can even bounce trade ideas off of us. Me, not just, we don't just have somebody, some guy that you can email. You can email me. You can bounce trade ideas off me. Hey, am I putting this spread together right? Right? There are 6,000 current people, right, that are active on TheoTrade. 13,000 that have gone through this class, but there's 6,000 people that are actively participating in our trades here at TheoTrade. Now, I'm actually going to talk you through a little bit of what we call some of our bonuses today. But before I do that, here, this is actually some of the curriculum for the class, right? You're going to learn to construct in-out spreads, and they are really easy to learn, okay, easy to place. How to buy longer duration options, okay, without paying more, which I was talking about earlier. Give yourself the gift of time, okay? How to use defined risk reward strategies, so you never have to lose sleep over your positions again. That to me is a big one right now. I mean, one of the reasons that we're actually presenting, in-out spreads over here. Look at the amount of risk. Like, by the way, I don't know if people realize, like, markets are all over the place right now. They are all over the place. People, it is downright sketchy out there. In-out spreads, they could be used in any market condition or direction, okay? But I'm going to tell you right now, these things are going to fare by far and away better in volatility. Okay. The more crazy we get, the better off you're going to be in, like, because you're getting two-sided action. We go up one day, we go down the next. Listen, build your own in-out spread with detailed step-by-step entry and exit criteria. This is important to me. Okay. In the criteria, we're actually going to take you through how to get in, how to get out. In-out spreads, they're easy to manage with set and forget order types. This is, again, it's GTC orders, good till canceled. In-out spreads can be done with trading accounts as little as $2,000. All the trades can be done in an IRA. Retirement accounts, it's fine. Minimal options experience. You do not have to have options experience coming here. Okay. We have relationships with most of the major brokerage firms. We will get you your options clearance in there. We will also talk in detail about capital allocation in this course, position sizing, and techniques to grow your account. Again, I am the trade instructor for in-out spreads. This is something that's kind of near and dear to my heart. Listen, follow the recipe. You go through this course, follow the recipe to get into the trades and follow the step-by-step. It's like a flow chart criteria to be able to get out of the trades. I have even one better in here. So after you go through, listen, okay, after you go through this 4-hour course and a lot is covered, then we actually have weekly updates for you. Weekly updates where we actually say, okay, here we go, in-out spreads, December 31st. And we'll actually kind of go back through all the different spreads, okay, that we've done. We'll go through like literally spreads that we have on. Okay. Somebody was asking about like Thinkorswim. Okay. By the way, we have great videos on Thinkorswim on our site. So I'm going to tell you again, I know Thinkorswim. All right. Again, a lot of features in here I help build. So we're pretty Thinkorswim savvy. We'll absolutely help you through that. This is what's important. Again, weekly weekly in-out spreads in here. And this is a video that we record literally on a week-to-week basis. We just say, these are the trades we're in. But we also text you out when we do the trades. So if we do a trade, we're going to text you. Now, as I said a moment ago, you want a bonus. And as I said, TheoTrade, we differentiate ourselves from any other, education firm because we go beyond one class. We do not sell classes anymore. I don't like it. Okay. We get that you want everything to trade and invest. You want it at one place and you want it at one price. So here's the first bonus. You get access to our entire library of classes from day one. And I just want to clarify, okay? We started, okay, and built TheoTrade in 2015. We went live in 2016. So this is kind of our anniversary right now here at TheoTrade, okay? We have now built 98 full-blown trading courses here. The guide to small account growth with in-out spreads. This is the one obviously that we're discussing today, but you also get access to everything else. Here's a smattering of some of them, okay? Volatility back spreads, guide to surviving and thriving in extreme volatility, okay? How to collect income being short. The next big short, this is the risk twist spread. Also one of the more prolific classes that we've done here is risk twist. Guide to selling high probability spreads, selling premium, minimizing your risk. Okay, essential skills for consistency in trading. We have day trading classes, covered calls classes. Okay, believe me, there are a ton of classes in here. A ton of classes in here. It's over $9,000 in classes alone. And I emphasize this because there's just nowhere else in this business that you can go and receive their full library from day one. Okay, and the caliber of the classes that we're offering are unrivaled. I also want you guys to know it's 98 classes. I myself don't put together 98 classes. This is our crew here at TheoTrade, Jeff Bierman. So Jeff Bierman also worked at TD Ameritrade. He was the former chief market technician for TD Ameritrade. Jeff Bierman, okay, is Professor Bierman. He actually moonlights. He's currently actually a graduate instructor at DePaul in Chicago. He was also an analyst and a trader prior to actually joining us at TD Ameritrade. Jeff's kind of claim to fame, if you've ever been on the Thinkorswim charts, Jeff himself actually built over half the studies in Thinkorswim charts. Next in the docket, Matt Williamson. He's our market neutral premium option selling strategist. If you're interested in selling option premiums, okay, and Matt also is phenomenal around earnings trades. This is your guy, Corey Rosenblum, senior strategist and our resident swing trader. By the way, we actually have Jeff Bierman has a CMT, Corey Rosenblum has a CMT, Brandon Chapman has a CMT. We actually have 3 CMTs on our crew, which is rare. Most major brokerage firms don't have that in there. So if you're looking for more for swing trading, okay, Corey's classes, this is who you're going to adhere to. Brandon Chapman. Brandon also comes from a Thinkorswim and TD Ameritrade background. Brandon actually worked in the education division of both Thinkorswim and TD Ameritrade and macroeconomics, technicals, and fundamentals. I'll tell you a quick story about Brandon. There was a course that we taught at TD Ameritrade, and this course literally costs $24,000 for an 18-month long course. I bet you some people probably took this course over time. I mean, literally, people paid TD Ameritrade $24,000 for an 18-month long course. Like, well, how does that relate to Brandon? Brandon Chapman actually wrote the book for that. Okay, so Brandon is on our crew now for a couple of years. We love him. Lights out. He just writes a tremendous amount, okay, of what we do here in terms of structuring criteria. It's phenomenal. Next in the docket, Slim Miller. So Steve Miller has been around pretty much since options have been around. He's also our resident in-house psychologist. So we do have some psychology courses if you're having emotional issues in the marketplace, which a lot of people that trade on an intraday basis do. Next, Tony Rago, NASDAQ futures and an intraday strategist. Tony trades all day, every day. All Tony does all day is calls out setup after setup after setup. Okay. In fact, Tony, right now, so you guys know, we're live right now. We're trading right now. There's a live chat room, which I will show you here momentarily. Last but definitely not least, our most recent acquisition here, Blake Young. Market profile, futures, currency, and our in-house commodity trader. Blake also comes from a background of both Thinkorswim and TD Ameritrade. So as I said, there are currently 8 full-time instructors, including myself. And here's a quick glimpse of most of us here at TheoTrade. Some of our staff here at TheoTrade. If you're kind of curious, all right, that's me. That's Matt. Okay, Steve Miller, Blake Young, Jeff Bierman, Brandon Chapman, Tony Rago, Corey Rosenblum. Okay, and just looking down, most everybody else, some of the support staff. We're missing a couple of people in some of these pictures as well, but figured I'd give you guys a quick introduction to a Zoom meeting that we were doing the other day. I took a snapshot. That's our first bonus, is giving you access to 98 courses. Our second bonus, we're going to give you 3 months unlimited access to TheoStream. TheoStream is a live trading chat room. As I said a moment ago, and here I'll bring it up right now. Okay, I said this a moment ago, so let's show it to you. Okay, we have a live trading chat room. What does it look like? Looks just like this because, well, this is it. I'm actually going to hit refresh right now, and as I refresh my screen, it's live.
Now we got to close above the 12, and so the way that I would play this could be a disaster stop, by the way, guys. So if you're following this, the way to play this is to let this come back to the roundy.
What he's actually doing in this particular room right now is he's calling out setups all throughout the course, okay? All throughout the course of his entire session. He actually does this for 6.5 hours a day, where he's actually calling out setups, and he's trading live with everybody, okay? So this is just one. That's literally just one of our instructors, but I wanted you to see for just a second what it looked like. And by the way, that's a trading ladder. You can trade stocks, options, or futures with Tony. But we give this for 6 hours a day. And we all take an hour a day. Tony takes an hour. I take an hour. By the way, I'm on every single day. Tony takes an hour. I take an hour. Corey takes an hour. Blake takes an hour. Matt takes an hour. Jeff Bierman takes an hour. And we go like this the entire trading day. We also provide you real trade ideas. We're firing trades all throughout the course of the day. You get to see everything we do. We do text and push notification, including in-out spreads. There are 5 separate trading portfolios. You can follow our trading portfolios and look at what we're doing. We do daily coaching sessions also with timely topics. When I say a coaching session, what does that mean? It's continued education. Okay. Who handles the continuing education? Who best? Jeff Bierman. Our professor of finance actually handles most of our in-house education. Our instructors will also directly answer your trading questions via email. One thing I put a lot of weight into this, okay? To be able to email us literally, okay, for the next 3 months is worth its weight in gold. Okay, that alone easily worth $1,000. You think about how much capital you might save being capable of shooting us an email. And by the way, I want to make something clear with the emails because there's a question on here that already popped in. As regarding the emails, you can directly ask trade related questions. I know everybody goes, give us a hypothetical. Listen, most of our crew here at TheoTrade, and I'll remind you, the crew here at TheoTrade, Jeff Bierman is a broker, analyst. He was a Series 724. Jeff actually worked in my crew for 7 years, right? Brandon Chapman had all of his licenses here. Blake Young, myself. I mean, listen, I've had, and why we can do this, I've had a Series 3, a Series 4, a Series 7, a Series 24, my Series 66. Okay. I've actually managed at one point over $350 million. We know how to answer trade related questions via email, and we implore you to do so. And again, I think that alone is worth its weight in gold. So you get 6 hours a day, and all of this is recorded. Okay. But if you can't watch in real time, it's fine because we also do text and push notification. Now, in addition to that, we also give you access to all of our proprietary indicators and scans. So we have auto expected move, we have S&P gravity points, TheoTrade RSI, Quantix NQ levels, next generation squeeze indicator, all of the indicators that we use on a day-to-day basis, and we're going to give you the auto expected move. I said that at the beginning of today's webcast. That auto expected move, I'm going to give you the link for that here momentarily. Bear with me. It's another $1,800 in indicators and scans. All right. Last but definitely not least, the third bonus. This is absolutely brand new. The third bonus, Theo Theta. Okay. We just opened up a brand new portfolio. Okay. Literally, it kicked off on Monday. Theo Theta Live. I'm actually trading live in a portfolio, and it's the first time that we've done a portfolio in this fashion. Everything in the portfolio is accessible. It's completely no holds barred trading approach. We are not limiting ourselves to one strategy. I am going to run the portfolio like a hedge fund. I am running and showing you my trading book every single day. Full disclosure on all trades from opening to closing, hedging positions. You're going to be able to watch me trade and discuss positions like nobody has ever done before. Everybody kind of shows like he put on a spread, he took off a spread, he put on a spread, he took off a spread. Forget all that. Okay. We're going no holds bar. And it's going to be a positive theta portfolio, which means premium selling. Okay. And the volatility, it's picking up right now for it. So all of the things and all of these approaches, it is all included. And again, there's third bonus. I'm telling you right now, you guys are going to love. You're going to get into this and watch the first 3 months of this. You're going to be shocked what you can do. Again, full disclosure, even hedging tactics, okay, on that portfolio there. Listen, what our members are saying. This comes from Ken. Woohoo! Thank you, Dom. Never sure of what trades are new to me, okay, that I structure myself. This is great to hear. Not to brag, but this is due to your magnificent team. I'm up $1.67 million in profit. Listen, Ken is not like, your usual guy. Ken actually has quite a bit of money in his account, but I love this one. Okay, I just love that piece of feedback from him. Listen, TheoTrade includes everything you're going to need to invest in trade. We give you classes, we give you coaching, we give you email access to the instructors, we give you a live trading room and live trades, we give you indicators and scans, we even give you mobile access 24/7. It's everything you're going to need to succeed in this business. What we tried to build, the onset of TheoTrade, we built the Netflix, for traders. I mean, every genre of trade, all of it. Today, it's $297. Okay, that's it. It is $297 for 3 months of access. And I want to clarify something really, really quickly here before I go any further. Okay, listen, it's $297. That is not a membership. That is not an introductory price. It is a 1K time $297. That's it. It's $297 one time. Okay. After 3 months, if you want to do it again, you have to actually tell us and we'll charge you another $297. This is not like some crazed gym membership where you can't get out. We're not doing that. We will not do that. Listen, we give you access to what? 98 classes. There's new monthly classes. There's a live trading chat room. There's 59 proprietary indicators. There's text and push notifications. There's daily coaching sessions with timely topics. You get email access If you go now to theotrade.com/IN, theotrade.com/in, you can enroll now. Okay. One last aspect to make this really easy for people. We'll make it a completely riskless trade. Everything you're going to need to start trading from novice to expert. One other aspect I hadn't even brought to your attention. There's some people here that are just brand new. They're like, where do I even start? We have a full start here menu. Options 101, options 201. I'll come back to that in a moment. But everything you're going to need to start from novice to expert, we just throw a money back guarantee on it. And the reason we do this, okay, is to make it, again, very, very easy for people. Listen, trade with us. Trade with us over the next 3 months. If you're not completely satisfied, and we don't put any, quotations around satisfied. If you're not completely satisfied, just email us. You don't have to call us. You don't have to do a little dance. You don't have to make love and get down tonight. Just email us, support@theotrade.com. Provide us the details of your trades and receive a full refund. Listen, okay, we only charge $297, okay, for 3 months. We have right now over 6,000 people, okay, that are on here. Listen, if you're not happy, okay, we'll give you your $297 back. And it's critical, though, that people understand one aspect. There's only really one stipulation to this entire thing. Here's the stipulation. You have to trade with us. You can't just come here and watch all of our classes and get your $297 back, because that's just not fair. If you are willing, okay, to trade with us over the next 3 months, okay, it's worthwhile to you. And I say, listen, those trades can be what, $40 here, $50 there, right? Listen, go through here, 10 trades, including any of our criteria. You don't even have to use in-out spreads. Any, okay, using any of our criteria, any of the 98 classes in here over the next 3 months. Your initial account value has to be at least $2,000. You have to follow our criteria. You can't just make up your own criteria. You got to follow our criteria. One other thing. They have to be real trades. They cannot be paper trades, okay? To make this fair, check it out. It's going to be worth your while. By the way, the only reason we do this, we want to stop people from just coming in here and, stealing our classes and stealing our criteria. So if you're willing to do a couple of trades, 10 trades the next 3 months is absolutely nothing. But if you're willing to trade with us for the next 3 months, it's completely riskless trade. All right. When I say completely riskless, again, it's money back guarantee. If you're not satisfied after 3 months, you do 10 trades, don't worry about it. Please, we want you, okay? If you're with us, we want you to be happy. And if you left us, we still want you to be happy and understand that, right? Get into TheoTrade now. We'll work with you directly. There are 30 spots on the TheoTrade riskless deal. Now, the reason that we do only 30 spots on the riskless deal, it's a matter of trade size. I got to go through and reconcile all of the trades. You're going to send me 10 trades. I got to go back through and reconcile all those trades. It's a lot. So we do 30 riskless trade spots today. And the 297 riskless offer, it's never been available before with in-out spreads, in addition to our brand new TheoTheta portfolio. And we've actually seen, just since we announced the TheoTheta portfolio, we have an absolute rush of people coming on right now to TheoTrade, including a number of professional portfolio managers, because we're just going to trade this like we would any other hedge fund, okay? Any major portfolio. Again, we're going totally no holds barred on the TheoTheta portfolio. I'm excited about it because it's me, and it's the first time, in the history of TheoTrade that we're actually going to show you what I kind of call it's the full Monty. There's nothing being held back in any way, shape, or form. And some people will love it, and some people will be a little confused. It takes a little time to get ramped up into the TheoTheta portfolio. Okay, again, it's everything that you would need to survive in this business. Listen, TheoTrade access that you get today, it's $297. Okay, it's the guide to small account growth with in-out spreads. And you know what? I'm actually going to pop over to the site right now and take you in here. It includes, again, 3 months all access to TheoTrade. And when I say 3 months, it gives you access to what? 98 classes. It gives you access to the Theta portfolio. It gives you access to text and push notifications. It gives you access to every archive that we have ever done here at TheoTrade. I'll cruise over right now to the site and make sure that everybody kind of understands. And we're going to answer some questions in here. Again, it's theotrade.com/IN. theotrade.com/IN. All All right, it stands for in, like in out spread. So theotrade.com/IN. There are, again, currently 30 riskless spots left. For those of you, as you are enrolling, I will let you guys know as you have enrolled that you've actually, okay, taken up one of the 30 riskless spots, just because people are already asking. So it takes me about 4 or 5 minutes before I see your enrollment come through. So bear with me. One other aspect I want to bring up over here, as you go here, when you click add to cart, so there's going to be some questions that come up here, so I might as well address them. When you click the add to cart, okay, one of the things I want to mention, okay, it is a single payment of $297. It comes up time and time again. It is not a membership. By the way, you can also do two payments. If you want to do 149 bucks and do two payments, that's fine. Okay. It is a single payment. I just want you guys to understand, once again, we don't do memberships anymore. We just don't believe in that. We don't believe in like squeezing people in there when they don't want to be in there. The other thing is, put your phone number in here. Please put your phone number in. Phone number. Why? That is for qualifying you for the text messages. So if you're overseas and you're like, I can't get a text message, I'm over, overseas. That's when you actually download our mobile application. In our mobile application, okay, you actually get push notifications. So that'll work out great. So again, this gives you access to the Theo Theta portfolio. It gives you access to 98 classes. It gives you access to our chat room. One of the important things here that you guys have to understand about TheoTrade is we give you everything from literally from day one, access to everything. The way, if you need us right now, we're here. Okay, you can actually come on here. Welcome to live chat if you have a question in here. But I'm also going to answer your questions in the chat room right now. I want to introduce you for a second to what TheoTrade looks like as you guys are enrolling. So this is TheoTrade. This is actually the chat room up on top. When I say the chat room, this is the video player. So the video player, okay, is
A
Tony
lot of
Rago.
work involved in that.
And you can hear him
Stocks,
talking, right? So that's Tony. This is actually live market conditions in here. I'll freeze that for a second. Down below, okay, down below, this is our clients. Our clients are having umpteen different discussions in here. So we're constantly, though, okay, constantly trading ideas in there. And we're actually providing setups. In fact, when the instructors speak, you'll actually see this. Okay, there it is. Corey Rosenblum, extreme headline risk. He is warning you right now. Okay, this is not a time, and you can even see Tony doesn't even have any positions in here really. He's only got like a one lot going right now. He sees it. Okay, this is getting extreme inside of markets right now. So we are live right now. We are also doing a happy hour tonight. Okay, we do continual education, but on Wednesday nights we actually do a happy hour, which actually kicks off at 7 p.m. Central Time. Tonight will actually be Blake Young. Other aspects, people always ask, what does our class archive look like? Option strategies, option newbie classes, technical analysis classes, day trading classes, trend trading classes, hedging classes, futures and bonds, stocks classes. Here's mindset. I'll just tell you right now, it's 297 bucks. Okay. You want to see what your money's worth right now? Come in here. And I'm dead serious about this. This isn't even one of my classes. Go in here and watch the 5 essential building blocks to successful trading. That is a Slim Miller class. Slim, okay, this is his 44th year in trading. Okay, it's a psychology class. I was in the business for 20 years. Okay, before I actually watched this class, it'll change your whole life. If you're going to be in this business, I'm telling you, you watch that one class, and then email us and say like, oh my gosh, $297. You'd pay $3,000 for his class. Okay. And again, I'll show you exactly where it's located because I feel that strongly. It's under mindset trading plan classes. But then people say like, what's the option strategies classes like? I am your resident options geek. Okay. How to collect income being short. All right. Selling options for a living. Guide to maximum edge trading earnings. Back spreads, volatility crash course, guide to survive and thrive. Okay. All of these have unique criteria. Tracking unusual options activity. That's actually Brandon Chapman. Okay. I can go on and on. I can go all day. I mean, I'm telling you, you guys are going to be absolutely blown away. I mean, say, oh, it's too much for 297 bucks. You'd rather be overwhelmed or underwhelmed. And if it's too much, guess what? You can join for another 3 months for another $297. That's up to you though. Okay. I'm going to tell you right now, people, okay, When they see what we do here at TheoTrade for $297, listen to me. When they see what we do here at TheoTrade for $297, most people are infuriated they ever spent a dime anywhere else in this business. Again, go to theotrade.com/IN. I'm going to answer those questions for you guys right now. By the way, those of you looking for the indicator, if you're looking for the indicator, it is right here. Auto expected move indicator for Thinkorswim. Okay. It's not like as you guys are enrolling, it is not essential. If you're enrolling right now, it's not essential that you panic, okay, to grab that indicator. We have all the indicators on our site. In fact, as you come into the site, you go, where is it? Where is it? Okay, shared charts, scans, portfolios, archives, okay, Corey's Corner. It's all here for you. Different resources. Somebody asked about, Thinkorswim. There's TheoTrade tutorials. We have it all. Okay, we have it all in here for you. Now, I just wanted to throw this out to you. By the way, what our members are saying, this comes from Steve in Southern California. Organization. Your organization continues to blow me away with its insights, expertise, resources, personalities, and structure. I've learned so much and I've been able to apply the knowledge to improve my trading exponentially. Thank you. And thanks to all your staff for everything. I'm grateful I found TheoTrade and grateful I had the sense to choose your organization as my mentor, okay, over all the other players in the marketplace. And now that you've added Blake Young, whose style I enjoy immensely, okay, I'm starting to adopt. Don't know what else to say except, TheoTrade's awesome. And I mean, again, I throw these out here. This one came in September 23rd. So again, go to theotrade.com/IN and we will get you enrolled for it. All right. This comes from Todd Summerall. Basically, this comes down to one thing, and I want you guys to understand this. Listen, don't know if you remember, but I emailed you a few weeks ago and told you my delta was positive a couple thousand or more. Okay, you told me smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before TheoTrade, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay, you can use this if you want. I do. Comes from Todd Summerall, and I appreciate that stuff because this is, by the way, that email it came in back in late March, where he literally would have been wiped out. His IRA would have been wiped out had he not listened. All right. So I'm going to answer a couple of general questions, and I'm going to come in here and answer some specific questions for you guys. Again, for those of you enrolling, it's theotrade.com/IN. Again, theotrade.com/IN. And I want to make sure that I do grab every one of the questions in here. By the way, I'm also, I'm watching markets a little bit out of the corner of my eye here. So one of the first things that often comes into play here is that, and people constantly ask me, they say, what do I need to get started? Okay, what do you need to get started? I'll tell you, it's a laptop, internet connection. You don't even need a laptop. You could use any Android, any tablet. Speaking of which, I apologize for a second, but people, I got position risk on. So we're open here. So what a difference a couple of minutes makes in a marketplace. It's taking some heat this morning, but if you want to see P&L, by the way, this is I was talking about the Theo Theta portfolio. This is what we call full disclosure. You are watching my P&L right now in real time. So I'm up, I'm down, okay, for better, for worse. You're going to see everything in here. And it's important that, again, we get to that level that it's completely and totally like full disclosure. I'm going to make money, I'm going to lose money, but this happens to be P&L for a day. If you're curious, total capital I'm tying up right now is about $100,000. Okay, but whatever, it's $6,000. Not exactly like massive. I just see the markets moving out of the corner of my eye and wanted to make sure we're all good to go here. All right, so you need a laptop, an internet connection, or just a tablet. We're going to give you everything you need to get started from novice to most extreme. Again, I want to reiterate something that I constantly mention. This is not a membership. We're not going to auto renew or auto bill you again. Okay. We're now providing weekly updates for in-out spreads, so you can follow every single move we make. That's always really important to me. TheoTrade archives everything. So if you can't, like, we get it. Like, you can't watch every single day, 6.5 hours a day. And we literally broadcast 6.5 hours a day. Every single day we broadcast 6.5 hours a day. In fact, today we actually broadcast 8 hours today because we do a happy hour that lasts about an hour, hour and a half. So every single day we realize like you're going to find people that you like and be like, you know what, I'll watch Don's archive, or I'll watch Blake's archive, or I'll watch Matt's archive. Everybody kind of adheres to a personality. Number 5, we're going to provide you access to TheoTrade Mobile. You can download archives and view them at your leisure. Okay. Number 6, add your cell phone number when you are enrolling. I stress that again. Add your cell phone number when you are enrolling. Why? Okay. Well, because we want you to be able to get some of the text messages. Those text messages, I mean, those are our trades coming out. Number 7 on here. Number 7 on here. You can email us anytime. Okay, you can email us anytime. You will receive a response within 24 hours. Now, that is for trade related questions. All I put this in here for, when I say response within 24 hours, okay, that's not meant to put anybody off. Just don't email us. Please do not email us with 5 minutes to go on expiration, man. You can't do that to me. It's 5 minutes to go on an expiration Friday. If you have not noticed, okay, I trade, okay, I trade a lot. And there's times where I answer emails. I'll tell you when. I am actually not even on Eastern time. I am an hour ahead of Eastern time because I live right now in St. Croix. So I answer emails early in the morning. I knock them out before usually the market's open. So if you got questions, they come in late in the day, I'll hit them the next morning. But we answer as a group here at TheoTrade. We're now answering about 280 some odd emails every single day. And we're fine with that. That's like what we do. I mean, listen, we have 8 full-time instructors. Okay. Plus, we have several traders that are all there to answer your questions, and you'll get right through to me when you want to email me. Number 8, you're going to gain access to every course that we've ever done in the previous 4 years. By the way, this is now 5 years. Okay, including classes, coaching, live trading sessions, archives. Okay, all of it. You get access to everything that we've done, everything. Okay, and it's all searchable. You can actually, we have like a full search engine built into TheoTrade. Okay, all trades that I've shown in terms of in-out spreads can be done inside of an IRA or retirement account with as little as $2,000. The in-out spread is a good trade for the retirement account. I'm not going to tell you every single trade is wonderful for a retirement account, but the in-out spread is wonderful. In-out spread is wonderful for the retirement account. So I do stress that. Number 10, we at TheoTrade, we can help you get approved for options. Sometimes like people go, TD Ameritrade turned me down for options. It's okay. We can make a phone call. We can get you taken care of. And you know what? If your brokerage firm doesn't want to let you do something, we can give you a brokerage firm that does let you do something. Like I'm kind of not thrilled with some of the consolidation in the brokerage world. Charles Schwab now owns TD Ameritrade. It's official. Okay. A lot of my friends still work there. Most of them have probably been laid off by now because it's a big acquisition. Nevertheless, we will find you a brokerage firm that you're comfortable with. Remember, there are 30 riskless trade spots. In fact, I'm actually going to read off a couple of names here momentarily of the first out of those 30 that have enrolled. Listen, just get results, take action, enroll for TheoTrade now because there is no risk to you. Let me also answer some of the direct questions in here, and I'm reading some of the names off too here momentarily. So bear with me for just a second as I'm going to answer your questions right now, and then we'll come back to a few of those names. So, and if you do have more questions, fire them in. Okay, that's what we're here for. I know some of them were actually typing answers to you, and some of them I'm just going to answer live. Okay, let's jump into the first one. Somebody said, Don, do you normally buy $2 wide spreads? So I used a $2 wide spread example in the XLE. In the XLE, I used a $2 wide spread example. So $2 wide spreads are beneficial to learn with. Okay, when I say $2 wide spreads, if you're trading a product like Apple, though, and something like Apple, and you can see I've got positions all over Apple. Okay, $2 wide spreads are not going to be able to get it done. That is something that very specifically will be addressed inside of the criteria. So I want to say that again. It will be addressed specifically inside of the criteria for the class that, what's the width of the spread. I will give you this generally, okay? $2 wide spreads are a great place to start. So I don't mind saying that, okay? All right, so somebody said, if you want to make more money, do you go out and do more contracts or wider strikes? Okay, so that's also addressed inside the class. If you want to make more money, you're actually going to do more contract size. You don't want to widen out the spread, because if you widen out the spread, it's actually going to push your break even point further out. All right, next. So can you get called out? You know what? Let me actually show you something interesting on here. So what happens if you did one of these spreads? What happens if you did one of these spreads like an Apple, and you bought the 126 calls and you sold the 128 call, okay? And somebody says, I want the right to buy stock, or I want a right to take your stock from you at 128. So they take the stock from you at 128. You can actually turn around and go, I would like to do what? Exercise my right to buy the stock at 126. So if somebody takes stock from you at 128, you have the right to buy the stock at 126. All you have to basically do is say, I exercise my right to buy the stock at 126. What do you make? $2. By the way, you'll never, never, never leave the trade on that long to actually see the assignment. Never. If you do get assigned, it's actually a blessing. I'm serious about that. If you get assigned, it is a blessing, just a blessing. By the way, I'm going to come back to some of the questions here in a second. We're almost, okay, we are almost at our 30 capacity for the riskless trade. It's I'm gonna butcher the first couple of names here, but bear with me. It's High H from Ontario, Canada. By the way, if you're from Canada, there are separate brokerage firms we work with in Canada. So I'm going to make some suggestions for you. You can email us about that. Leonard L from Louisiana, Glenn W from Texas, Pamela O from New York, Billy C from California, William M from New Jersey, David H from Florida, Charles P from Minnesota, Richard R from Texas, Steve R from Texas, Douglas R from Iowa, Michael F from Nevada, Robert B from California, Gary M from Colorado, Tsunami, I hope I didn't butcher that. Tsunami M from California, Kirk G from Florida, Richard K from Arizona, Grant B from California, Aaron R from Ohio. All of the following names. First of all, I'd like to thank you guys for enrolling, of course, from TheoTrade, but you're also enrolled for our riskless trade. Clearly, I've read off here, and rambled off, well over 20 names. So there's a handful of riskless spots left. It takes me about 4 minutes before I actually see some of the enrollments that are coming through. All right, back to a couple of the questions in here, because I want to make sure I get these addressed. So, hey, do you prefer diagonals or just verticals? So, to answer that really, really directly, I actually do a combination of both, but in a position of a very volatile marketplace, in a volatile marketplace, Marshall, I much prefer to use the vertical spread, because diagonals are going to imply that I'm taking a lot of volatility risk because it's front and back month. So, Marshall, it's actually an excellent question. I much prefer verticals in a heavy volatility marketplace, right? So Douglas asked a question, how are in-out spreads different from regular spreads? So in-out spreads, okay, is something that it was taught to me, first of all, really early on in my trading career. And they say, kid, you do this, and the in-out spread is designed to reduce the risks of everything that hurts people in this business. When I say what hurts people, okay, so you're going like one strike in the money, one strike out of the money. It reduces volatility risk. It reduces, okay, delta risk. It reduces time decay risk. It reduces any gamma risk. So what in effect you're doing with the in-out spread is you're putting on an options trade, but you're negating, okay, the aspects of options trades that hurt people. You know what people get hurt? They go out and buy a call and it doesn't work. And the moment the position starts going against them, they just get ripped apart, because they're like, if the position goes against you, the volatility goes down, the earnings come out, the stock moves the wrong way. The in-out spread keeps you intact. It keeps you alive, right? It's all the attributes of defined risk with none of the negative side of options. And believe me, there's a dark side to options. This spread is designed to circumnavigate those. All right. Continuing on over here. And again, there's a few more names that I'm going to rattle off here in just a moment. Okay, so continuing on, we covered Douglas, $2 wide spreads. By the way, is your end in-out spread narrow to reduce risk? So the in-out spread, why is it so narrow? So a bunch of people have asked about this, okay? Why is the in-out spread so narrow? Let me actually show you something here. So Apple is all over the place right now. Let's actually cruise to a little bit more of a mellow product. Okay, and you can see XLE actually continued to back off a little bit here. I'm just looking through, so bear with me for just a moment. Bear with me for just a moment. There we go. Well, actually zero and even Facebook, okay, Apple, any of these, but I'll come back to the XLE example. If I did like a 40, okay, 42 spread, this is for 87 cents. Listen, if I do a wider spread, the stock has to then move more, okay? The stock would have to move more for me to make money. So I can't stress this enough. If I do a wider spread, it forces my break even point out. So what you would rather do is do a tighter spread and more contract size, but you can't go too tight. There is a very definitive piece of criteria in the course that covers spread width. It's a very, very critical, like, there's some critical nuances of putting on the in-out spread, and that's one of them. Okay. So somebody says, does this work in the options on futures? Absolutely, unequivocally, yes. Okay, options on futures are totally in play for this. In fact, okay, there's a new thing called micro options on futures, and you can even trade these on micro options on futures. And you're like, well, why would I want to do that? Because there's no day trading rule. Not that we are day trading, but there's no day trading rule. By the way, a couple more names just came in. Alex B from Illinois, Rahesh N from California. Just trying to get all these names out. Oh, I like this. Somebody said, how do you pick the stock to trade? I'll just tell you, liquidity and volatility. And we give you those guidelines. And the liquidity and volatility, we actually give you lists also of things to trade. It's pretty easy. There's even a scan for it. I like it. Okay. Oh, I like this one. Trader also asked me, somebody said, how do you know when to use a call or put debit spread? Also covered in the class. You know what? You're actually going to see in a lot of my examples, I'll trade some bullish and bearish, but depending upon what skew looks like in the marketplace, can be really, really insightful. And that's, again, it's something that is covered in very much detail in the class. So by the way, some awesome questions coming in today. Seriously, I've done this, dozens and dozens of times, but some of the best questions I've ever had have popped in here today. Again, I'm gonna wrap things up because again, I've gone way over in time. Listen, we'll stay here. We'll answer questions. I implore you again to hop over to our site. Again, as you pop into the site, we can also answer questions for you right here in our TheoTrade live chat. Again, it's theotrade.com/IN. I think there's literally, and again, I'm watching a couple of more names pile through over here. Okay. There are literally 3 riskless trade spots left. Again, 3 riskless trade spots, I believe, that are left. Okay. Thomas H, Scott D, I just got your names on there. So Thomas H and Scott D, those names just also came through in here. And again, a handful of riskless spots left. Listen, I want to thank everybody for joining us live throughout the course today. If you have any questions, first of all, I'm in the chat room first thing in the morning. When the bell goes off, I will be live tomorrow morning. Obviously, I'm on tomorrow for about 45 minutes first thing in the morning. I'll be around the entire trading day to be able to answer questions. You can also email us. It's support@theotrade.com. Again, support@theotrade.com. We are more than happy to answer questions, and especially some of your trade related questions. Thanks everybody for joining us today. Have a wonderful afternoon, a wonderful evening. On behalf of everybody of TheoTrade, bye-bye.